Hi, my name is Tom Long from Daily FX, and I'd like to take some time here to talk about moving averages. In particular, simple moving averages and how I use them in my trading approach. Now, moving averages are really one of the easiest technical indicators to understand because, after all, a 10-day simple moving average is nothing more than taking the 10 closing prices of the previous 10 sessions, adding them together, dividing by 10, and plotting that number on the chart. And as you generate the new number every day, you connect them, and it pretty much shows you the direction of the flow of the market. Basically, it's filtering out the noise. Okay? Now, I think that the most popular technical indicator in use today is the 200-day simple moving average. It's something that you see always noted in newscasts and in financial publications, that traders seem to follow this one more than any. And I'd like to share with you how I use that, because that is the one indicator that is commonly found in all of the charts that I use. The 200-day simple moving average on the daily chart, otherwise known as the 200-period simple moving average on the intraday chart. Now, say this is the 200-day simple moving average, and I've got a daily chart here. Okay? Now, I'm not going to use multiple moving averages for crossovers. I'm not particularly looking for tests up against that moving average to offer resistance. I'm simply using it as a directional bias, otherwise a tool to help me identify the trend. And this is the situation, and one of the situations I look for. We see the market is making a series of lower highs and lower lows, which is usually indicative of a downtrend. But confirmation is when we see that happening as it's below the 200-period moving average. It's very key, the fact that it's below the moving average. Now, if this market would be making a series of lower highs, higher highs and higher lows, and it would be above the 200-day simple moving average, that would be an indication of a strong uptrend, and I would be only looking for buying opportunities in that environment. But on this environment, we have a downtrend. The market is below the 200-day simple moving average, so I'm looking for buys. Now, that would be the same no matter if I'm using a 4-hour chart, a 1-hour chart, a 15-minute chart, or in some of our scalping videos, we actually use this approach on the 1-minute chart for those quick moves in and out of the market. But in this case, I would have a daily chart here. And what I'm looking for is the typical ABC move to take place below the 200-day moving average for a selling opportunity. Otherwise, typically what I'll do is I will sell as the market moves down through point B and place my protective buy stop above point C. And hopefully the market continues to make a series of lower highs and lower lows. But it really all sets up with first using that longer term chart, having the 200-day moving average on there, finding the strongest trending moves. Otherwise, I want to see the market making the lower highs and lower lows below the 200-day moving average for sells, or I want to see a 200-day moving average moving up and the market above it making a series of higher highs and higher lows, and I'm only looking for buys in that environment. That keeps me in on the momentum side of the market and can increase my chance of success on the trade. And after all, that's what these tools are supposed to be doing for us. Okay, so that's how I use moving averages in my trading. Again, my name is Tom Long with Daily FX, and thanks for joining me.